Hey, everybody, this is Connor Bourne here with Bourne Financial Coaching. As always, I'm here to help you harness the power of your money and to help guide you towards more effective and intentional financial choices. Today kicks off a couple of podcasts that we're going to be doing here in a row on taxes. It's kind of the beginning of tax season here in January for a lot of us, and I'm here to just provide a few thoughts and a few things as it relates to your taxes that might be beneficial to you in your situation. As always, um, because I'm speaking to, but I'm building a podcast, so I'm speaking to a very broad audience, and I don't know everybody's personal financial situation. So please understand that although everything I'm going to be talking about can apply to somebody's financial situation, it might not apply to yours. So I always want to put that disclosure out there. But let's dig into the content. As always, I'm going to be going back and forth between a just little Google Doc that I have open. If there's any points in particular, I want to make sure that we really hammer home and discuss. Or if I just feel like, for those that get to watch this on YouTube, that, might be a nice time to see something different. um, so, the first piece that I want to share and the first thing that I want to make sure that gets covered is within your tax situation, it's always important to maximize your retirement contributions. And a lot of times this gets reviewed in sort of year-end reviews with your financial professional. Um, but one move that you can make to lower your taxable income is contributing to retirement accounts like a 401k and an IRA. For those of you with a traditional 401k, your contributions are deducted from your paycheck before taxes, which reduces your taxable income. For 2024, the contribution limit for employees is 22,500 if you're under 50. And if you're over 50, you can contribute up to 30,000. And I'm going to stop right there because um, that is something that is worth writing down. So yet again, the contribution limit for 401k in in the 2024 tax year. So if you were seeing this in 2025, it'll be important to double check this number is 22,500 if you're under 50. And for over 50, it's $30,000 of contribution that you can make. So a big number and can be really impactful, especially with that catch-up contribution. These are, as I said, these are, just always remember to double check those numbers year in and year out. If you have a traditional IRA, you can also contribute and potentially lower your taxable income, depending on your income level and whether or not your spouse has access to a workplace retirement plan. For 2024, the contribution for an IRA is $6,500 or $7,500 if you're over 50. So for IRA, 6,500 if under 50 and $7,500 if over 50. Additionally, and this is another, this is in the same kind of idea. If you're eligible for a health savings account or HSA, uh, and are enrolled in a high deductible health plan, you can contribute, and this is for the 2024 tax year, you can contribute up to $3,850 for individual coverage and $7,750 for family coverage. The HSAs provide that triple tax benefit. Contributions are tax deductible. So contributions tax deductible. HSA. Contributions are tax deductible. The growth is tax free. And the withdrawals for qualified medical expenses are also tax free. So qualified also tax free. So that's different, retirement and health contribution plans that you can use to lower that taxable income. Uh, Next, and we will, I hope maybe everyone has written down, or you can just rewind because you'll be seeing this on YouTube as well. The next segment that is always important when trying to maximize your tax efficiency, minimize your taxable income, is review all available tax credits. These can be even more impactful than tax deductions because they reduce your tax bill dollar for dollar. So it's kind of right there at the very end. And one of the big tax, and a few of the key tax credits that could be available are, first off, we have the Earned Income Tax Credit. I'm going to EITC. And this credit is designed to help low to moderate income working individuals and families. The amount of the credit depends on your income and filing status and number of children you have. For 2024, that credit can be as much as 74.30 for a family with three or more qualifying children. But eligibility amounts do change annually, so be sure to check back on that. So that is something I won't even write down just because it's going to be worth check. I will write down. Let's check the annual limit or credit, pardon me, contribution, or check the annual credit. So that is something that could be and would be always important to know, especially if you feel like you're in one of the lower to middle class tax brackets. Another tax credit that is impactful for a lot of people is the child tax credit. If you have children under age 17, you may qualify for the child tax credit. For 2024, that credit can be up to $2,000 per child. But yet again, the specifics change each year. Check with a tax professional. And number three is education credits. If you're paying for higher education, you might qualify for either the American Opportunity Tax Credit or the Lifetime Learning Credit. These credits can offset the cost of tuition and related expenses. For the American Opportunity Tax Credit, you can get up to $2,500 per eligible student for the first 4 years of higher education. Yet again, with all of this, it's important to check year in and year out. So really for this section, if there's going to be notes, income tax credit, something that everyone should just double check and know about to see if they can qualify for. Child tax credit. That is something that, you can't, maybe a little more straightforward to know if you qualify potentially for a child tax credit. But always understanding that there is that potential there. And then the education credits. So those are three potential tax credits that are always important to be aware of. The third thing that we're going to be discussing is to gather all of the necessary documentation. For this, there's really there's potentially a lot of documents, but there's three main documents I want to make sure that we go over right now. You have your W-2s, which is, your employer income. The company that you work for is, generally that's going to be the document that you're going to be receiving. 1099s, that's more for freelancers and contractors, or investment income. And then receipts for deductions. This would be if you are itemizing your deduction or itemizing your deductions, which would mean that you are above the standard deduction. One helpful tip is to create a digital folder for all of these documents. Generally, your tax professional can help you out with that. Finally, and the last thing that we're going to be discussing today is evaluate if itemizing deductions is worth it. The standard deduction for 2024, was $13,850 for single filers and $27,700 for married couples filing jointly. which means if your total itemized deductions, such as mortgage, interest, medical expenses, or charitable contributions, add up to more than that standard deduction for your filing status, it could save you more money. So there is a lot of times where that mortgage or the standard deduction is the way to go, but there are also people out there that do itemize, and that is more efficient for them tax wise. Um, if you are someone who does itemize, a few things to just always remember to keep in those calculations would be mortgage interest, because homeowners can deduct interest paid on their mortgage. Always important to check how much per year. Medical expenses. If your medical expenses exceed 7.5% of your adjusted gross income, you can deduct those. And then charitable contributions. I've done a couple of radio shows, or one radio show, getting to talk about all the ways charitable contributions could help with your taxes. Now that we've discussed a few of the elements that are going to be really important as you start tax season, don't wait until the last minute. It's time to get started. Preparation is going to be really key to a smoother and more successful filing process. Just remember, retirement contributions, tax credits, proper documentation, and evaluating your deductions can make a huge difference in your tax bill. If you found this episode helpful, schedule a complimentary consultation with me, and be sure to follow for more tips on tax planning and financial strategies. Until next time, this is Connor with Born Financial Coaching. This has been Connor Bourne with Bourne Financial Coaching. Connor is an independent investment advisor representative affiliated with Registered Investment Advisor Strategic Blueprint. Everything we discussed today on the financial front are principles that can be applied to certain circumstances that may or may not be yours. Therefore, please do not consider this individual advice because I do not know your personal circumstances. For such advice, please reach out at cbourne@bournefinancialcoaching.com.